activities. So I'm using a 2-column format here. That 193, 110 is to the far right column. So we only had 2 items, right? We only had 2 investing activities. Who can tell me what they were? Purchase of new equipment. And that amount was 90, right? Cash amount, 90. And what else? Yep. Sale of old equipment. And how much cash did we get when we sold that old equipment? 8. Okay. So then we had a net amount, obviously, right, here of 82, negative, right? We're going to call that net cash used in investing activities. Okay. And we have financing activities. And we have, should be 3 items there. Somebody give me one of them.
Retired bonds, maybe.
Yep. Retirement of bonds. It's one of them. And the word retired means paid off, right? And how much did we pay off? 60. Right. And that was an outflow because we're paying something off. So anytime money goes out, parentheses around it, right? Okay, another one. 2 more. We sold common stock, right? Sale of common stock. And what kind of cash flows did that generate? How much? $40,500. Okay. And lastly, what else did we do? Payment of dividends. Yep. How much do we pay out in dividends? How much cash did we pay out? 64,000. Okay. So when we net all of those together, you get a negative 83.5. Seriously, I'm going to run out of room over here too. Okay, and so we're going to call that net cash used in financing activities. I'm going to continue it up here. So now we take the 193, 110, we subtract 82,000, we subtract 83.5, and what do we get? What's the amount? Okay, 27,610. Does that look familiar or sound familiar? What does that represent? That's our net increase in cash. That's exactly right. So if you look at your T account for cash, go find your T account that we evaluated, right? And cash had a beginning balance of what? 39,600, yes. And when we take the increase and we add it to the balance, that should give us the cash balance that we had in our cash account on December 31st, 2013. And when we add that up, we get 67,210. And that, my friends, is your statement of cash flows. Because what we've just done is we've explained the reason for the change, and there it is on the PowerPoint, or not the PowerPoint, the Excel spreadsheet. We've explained the reason for the increase in the cash balance. We've explained where the $27,610 came from. It only took 4 days. However, it's not something we look at a lot, and I don't ever assume you've all had instruction in it, so I take my time. You'll eventually be doing one of these on your own at some point, so keep that in mind. Okay, questions on any of that so far? Okay, now I'm going to give you guys about 10 minutes or so. I want you to take a look at one of the questions. So make sure your Excel spreadsheet, we didn't make any changes to it, obviously. But in the handout that I gave you, before we move on here to the next problem, there's a what-if analysis on page 85 of that handout, okay? And I'm going to give you, I want you guys to talk about it with each other. So suppose that an audit of Prime Sports Gear encountered the following 2 errors. And we know that's one of the reasons that we have audits is to find errors. It says in part A, inventory totaling $4,500 should have been written off as worthless at the end of the year, okay, for whatever reason. Year-end inventory should be only $195,600. Net income is reduced to $117,110. Now, there is a journal entry that goes along with that part, okay? So try to figure out what that might be to fix that. Because at this point, you'd have to do an adjusting entry to fix it, all right? So think about the entry that would fix that inventory. That entry is going to affect income and the inventory account, all right? So kind of giving you a hint there. And we'll certainly talk about it, but I want to see if you guys can get it. Letter B says, checks totaling $20,000 for some of the salaries payable at year end had in fact been written and mailed out. So they recorded $20,000 as salaries payable as if that was going to get paid in the future, when the reality is they actually wrote the checks for that amount, $20,000. So it says thus, both the cash account and the salaries payable account are overstated at year end. And so you need a journal entry to fix that as well. So I think it's easier if you figure out what the journal entries are first, and then go to the statement of cash flows and figure out where you need to make your adjustments. We're going to go over it, but I want you guys to work on it for about 10 minutes on your own, see if you can come up with it. So correct both errors on the worksheet. But again, I want you to make sure that you understand how to correct those errors, and you do that first with the journal entry. Because the only way those account balances can actually change is if you journalize and post. This is just a worksheet. This doesn't update our general ledger, though, if you think about it, right? So just work on those 2 for a few minutes. We'll go over them. See if you can come up with the right answers. The journal entries might be slightly different than the way you deal with it up here, okay? So keep that in mind too. Like I said, we're going to talk about it, but I want you to do the journal entries for each and then fix the worksheet.
it's always the bigger question.
In the meantime, I'm going to pass out these other ones while you're working on that.
It's the actual cash.
Yeah.
Yeah, that makes sense.
The next one's ratio analysis. I'm sure some of you are so excited to do that again. Or it's fresh in your mind at least, right?
Last week. I need my review.
I know you guys have, some of you have been doing a lot of ratio analysis. You guys could teach this section if you want.
So it's just like fonts, you know, fonts.
That's right. Just try. Go over it.
They would put each other out here. I don't know. Would you just do it probably? So would it be, we have to. Okay, so we have the money, and then we have, so money goes down.
Right.
That was from, yeah. I just don't know, like, on.
Lottery won't get too far.
Like, I was gonna say,
Yeah, right.
no, that person, we got to turn on.
It's not supposed to rain today? My gosh. It's been raining.
I don't think so.
On the news today, they said that we're not done flirting with 80-degree days.
I know, next week's supposed to be warm.
Oh, it's
Next
still
week it's
90
supposed to be
back
warm.
home.
Although I don't mind because I don't really want to turn my heat on yet
Oh.
at home, so. Which
My
my
mom
kids both
did,
say,
like,
you don't turn it on until December anyway. I said,
90.
December's pushing it along.
Yeah.
Wait that long.
For all breaks.
So you can-
80-degree weather.
Oh, it's,
No,
that's what I
it's-
said. I said, we're gonna have, it's gonna be
It's not
80
gonna
degrees one
fall.
week and then the week after it's gonna be snowing.
Yeah.
That's exactly what's gonna happen.
Every day that's warm here, pours and rains all day.
I know. I'm so sick of the rain.
Yup.
It's really interfering with
Well, I just
sports.
wanted to make a
weekends.
decision, because it's like,
It was
it'll
senior
rain
night
for
last
like
night
an
with my son.
hour.
It
and
took us
then-
2 hours to actually have senior night.
Oh,
Because
really?
yeah, because it was like,
rains
and it wasn't even like a drizzle. It was like a torrential pouring where you couldn't even like be
Yeah.
out in it. You know what I mean? Like it's
Yeah.
not like you could stand out there and.
The wind is like the windows were, like my window flooded itself.
Oh.
Oh, really?
Yeah.
It's-
Yeah,
Because
there's
there's
a
so
lot
much
of that
wind.
flooding thing
It's
going on.
not, it just has to make up its mind. It's either gotta rain all day or it shouldn't rain at all, because it's just doing this weird, like,
And I'll be
15,
interested to
20
see what
minutes.
happens because the leaves
are
like need to
changing.
dry out in order to change. Do you know what I mean?
Well, they'll
I'm not really
change
sure.
And then like they'll fall and then.
Well, yeah,
it
they're gonna,
doesn't
what's it
look
gonna,
like
they're not gonna change, it's gonna freeze and fall off then because it's gonna go from 80
So it
to
won't be pretty.
30. Right. And I really look forward to that on my drive here. This is some really pretty.
It's kind of changing.
Some of them
Yeah,
are, yeah,
a
some of
little
them are. But I feel like it's too wet, like
Yeah.
like all of my summer plants are still alive.
Really?
Yeah, like all my like, stuff I have on my
I'm
deck.
surprised, because we did down to, you remember, like, what was it?
I know, but it
2
really
weeks ago,
wasn't
like,
that
deep
cold.
down?
Not cold
Oh,
enough.
see, that's really cold for
But,
me, because
yeah, but
summer
it's
girl
still, yeah,
here,
like, it's
so-
like, right, but it really isn't, so. I still, all my stuff on my deck is still alive, I'm kind of getting annoyed by it, but I hate to throw it away. You know what I mean, because I hate to throw it away because it's not dead.
Yeah.
You know, but like, I'm
no.
sick of, like, I don't really even water it, my husband does, but- or else it would have been dead. He's always like, you know, those plants you go by every day when you pull in the garage, like, he's like, you know, they're really dried out, I'm like, yeah, I didn't notice.
It's
I'm not
fun.
very good at, I'm not a very good plant
Like, she
person.
loves gardening, but like the way she gardens, she'll every year she'll just go buy a whole new batch or whatever. Like you're supposed to try to like
I know.
regrow what's
I have
there.
I have a plant in my office, it's called, it's a plant of steel. You only have to water it like once a month.
Oh,
And
that would be the one
I don't
for
know,
me.
it's still alive though, I've had it for like 2 years. so-
Congratulations.
Thank you, I know. And every now and again, I catch a glimpse of it up in the corner, I'm like, oh, I better water that. And then even all summer, like I was up here a couple times, I only watered it when I was here and it seemed to be fine.
See, I just bought my first 2 plants, and they're 2 ivy plants.
They grew.
I know.
They're crazy.
I
I
have
know,
a
they're
tendency to
longer
ignore
since
things
last
like
time you
that.
were
It's a
there.
good thing I didn't do that with my children, right? You
Do
know,
what?
Ignore them like
Oh,
I ignore my
them
plants.
until
I'm not very good at that. All right, you guys ready? Some ideas here? All right, let's do the journal entries first, then we'll hit the worksheet. Okay, so the first journal entry, how would I correct the inventory issue? I want to correct the general ledger accounts. Don't worry about this right now. But if we had to correct the inventory account, how would I do that? What am I debiting and what am I crediting? Yes, yes. Debit cost of goods sold and credit merchandise inventory for 4,500. And you see in that statement that's on your paper, it says that net income should have been something different, right? So net income was 121, like I don't remember, 121,610, right? That was net income before. So we have this error, right? We have this error, and to fix it, we had to debit cost of goods sold. So our cost of goods sold account would have gone up by 4,500, which would have made net income do what? Cost of goods sold is an expense. Yes, it would have gone down 4,500 because we had this additional cost of goods sold. So that's where they're getting the 117, 110. Yeah. Make sense? And then the credit to merchandise inventory would have then obviously, we only credited merchandise inventory for 10,830. We should have credited for another 4,500. We'll get to that, but that'll fix that. Perfect. Okay, very good. Thank you. Number 2, salaries overstated. Salaries payable. So how do I fix that one?
Isn't it like salaries expense, salaries payable?
Well, if you think about it, okay, so it's not the expense that they said we had the problem with. It said that we actually wrote out checks for paychecks that we recorded as salaries payable. So the expense portion was correct. So its salaries payable was overstated by 20,000. How do I fix that? Take a guess. Anyway. Other way around, because think about it. They wrote the checks.
Credit cash.
right? So I want to credit cash and I want to debit salaries payable because salaries payable, I put 20,000 in salaries payable that I should have credited to cash originally. I should have credited cash originally. So, my ending cash balance actually was not correct then. Okay, so let's take a look at that cash account real quick. Okay, we had a beginning cash balance of 39,600. We said cash went up by 27,610, right? But the reality is if I credit cash for 20,000, that takes 20,000 out of my net increase. So by how much did my cash actually go up? Not 27,610, only 7,610. Right? So my cash flow statement is going to only explain this change, right? 7,610. Because what happens to my cash account, if I post this credit to cash, right? And I could do it, I don't have all of we said cash was this, right? And originally, we had a debit here of 27,610, that was the difference. But if I fix this, right, like that, this is what my new balance becomes. Here I just did the net, right? I just looked at those two together. But if I do it, if I fix it, it's going to reduce my cash by $20,000 because instead of crediting salaries payable for $20,000, I should have credited cash for $20,000. So I overstated my salaries payable and I overstated my cash. Okay, now, how do we fix those on our worksheet? Well, let's talk about that. Okay, so let's start with merchandise inventory because I think that's probably the easiest place to start. Merchandise inventory, we credited that account for $10,830, right? That was the amount. Again, I'm not going to draw these T accounts up here, but let's just do it this way. So merchandise inventory, we credited for 10,830, right? This error gives us another 4,500 in here as a credit. So what should have been my total credit? Right? 15,330. Okay, so I'm going to come up here, and this is transaction C, right? So I'm going to fix that. And if we look at the ending balance, 195,600, if you read in your book again, it says year-end inventory should have been 195,600, and it is. So now I got to find the other half of that transaction. That's just the credit, right? Remember, we have 2 A's, 2 B's, 2 C's. Some cases we had 3, but in this one, so go down here to operating activities and find transaction C. My decrease in merchandise inventory actually should have been 15,330. You with me so far? Okay. So that really only addresses this component right here. Okay? We have to go now and do this. We said cost of goods sold changed my net income, right? So net income it's in 2 places here, just like everything else. So first of all, let's look at retained earnings, transaction letter M in the credit column. So right now, this was 121,610 of net income. That increased retained earnings, the number should have been 117,110. Okay, so change that retained earnings, column F, transaction M, to 117,110, because our net income isn't really 121, it's 610, it's 117,110. There's another half of that transaction, right? Find the matching M. The matching M is down here in the operating activity section. Remember, because what we do is we adjust net income, right? Well, now this net income isn't right. The audit says we made a mistake, so I need to change that now to 117,110. Okay, so far so good? Okay. All right, that takes care then of this half of our correction, right? We did both. Now let's take a look at salaries payable. We'll start with this one. Salaries payable. So if I debit salaries payable, if I look at the T account for salaries payable, we increased by 24,000, correct? Okay, so I'm up here at salaries payable. This was 24, right? So what am I doing to salaries payable in my journal entry? I'm debiting it, right? So if you think about it, salaries payable, I'm running out of room here, I just don't want to erase anything. So let's take a look here. Salaries payable. We started off originally with a balance, okay, that's not a good start, with a balance of, I already forgot it, 30,000, right? We ended with a balance according to our first evaluation of 54, so we said it went up by 24, right? But we have to fix it, that's not right, is it? What did we do to salaries payable? We debited salaries payable, yes? So that takes this down to 34. So what I'm looking at on my spreadsheet is just the net of these two, right? 24 minus 20 is 4,000. I really only had a $4,000 increase in salaries payable, not 24. So I'm going to change that 24 to 4. Okay. And then the other half of that, so that was transaction I. Changed the credit from 24 to 4. We should have only done 4,000. Okay. Go down and find it here in my operating activity section and change that 24,000 to 4,000. Does everybody understand what I'm doing? I'm really just looking at the net here, the net number. Between the fixed, what I originally did, and then how I had to fix it. Okay, so that takes care of salaries payable. Now we do have a direct change in cash. So I actually have to reflect, this is my cash flow statement. So because I have a transaction that corrects cash, I have to correct it on here as well. Okay, so up here, let's go to the cash account. Because my cash account, unfortunately, did not really increase by 27,610. It only increased by the net, right? And so I did this twice, but 7,610, yes? So that's what we're trying to explain. So I need to change that debit from 27,610 to 7,610. And then you'll see here, my new cash balance, 47,210, is what I should have. So my cash flow statement is explaining the increase of 7,610, not 27,610. But as with all of these, excuse me, there is another transaction A somewhere, right? So we got to go find it. And it's all the way down here at the very bottom. My change in cash was not 27,610, it's 7,610. Notice my change in cash was already correct over here in my three different activity sections. So those two numbers have to match up, okay? So now all we did was we made our adjustments, which often happens with an audit, and then you've got to go back and fix your worksheet. Okay, questions? Wasn't that fun? Save that and upload that to me in Canvas, please. And we're done with cash flows finally. Oh, it's always sad to be done with cash flows. I like cash flows. Anyone have any questions on anything I just did there? So remember, when you fix each of those, you got to fix them in two places. So up here, so these are debits as of 12,000, as of 2012, credits as of 2012. Those two numbers. This is 2013. These two numbers have to match. Debits equal credits in 2013. Yeah, it's not going. It's not going up or down. Yeah. Mm-hmm. And our debits still equal our credits. Keep that in mind. We want to make sure that that always happens. And in order for that to happen, I have to at least change 2 accounts for each of my errors, right? Each side of my error. Otherwise, I won't stay in balance. Questions on any of that? See why I love T accounts too? Don't T accounts just make everything better in accounting? I'm getting way too happy over T accounts and cash flows. Okay. You guys have any questions? All right, so let's take a look at the handout that I just gave you, the ratio analysis. Some of you are like, seriously, more ratio analysis? Do you have any idea what other classes I'm in right now where I'm doing ratio analysis? Well, maybe, but okay. So we're gonna take a look at this one, and we're not gonna get too far here today. So what we have is a couple of comparative financial statements for global technology, and you'll see that we have 2011 and 2012. You guys are going to be coming up with some ratios, 10 ratios. We're going to perform just a kind of a basic analysis. Over a 3-year period, we're going to talk about industry norms, which again, I'm sure at this level you guys are accustomed to discussing some of these things, and I even have a couple MBA people in here that I know are probably like, oh dear God, we're doing this in MBA too. But it's important, and the thing about that ratio analysis and analyzing companies is no 2 companies are the same, as you I'm sure are all aware. And when you go and look at a company's financial statements, you know, it may be different than the last companies that you looked at. So you have to get comfortable, and you have to get more, I think, confidence in knowing, you know, how to kind of dig through the information, being comfortable with looking at 10Ks, which again, no 2 look alike. And when you can't find the information, knowing what other resources are out there for you to find that information. Also, when you see ratio formulas, different textbooks can present them slightly differently. Even online financial resources sometimes present or use a slight variation in formulas for ratios. So you kind of have to, you know, learn how to deal with that as well. I mean, these are going to be pretty straightforward and basic, but nonetheless. Okay, so we've got the income statement, we've got the statement of retained earnings, and then we have the balance sheet on the next page. I don't know why that mark is at the top of the page. I made a note there, but I don't remember what it was. So flip to page 92 with me. I sometimes like to play these fun little games of fill in the missing value, and I don't like those games. So I put it there for you. It's not very clear either. It's $41,700 though for cash. Okay. Like I'm not really interested in whether you can do algebra at this point, you know. So 41,700, okay? At the top of that page, you see on page 92, and I didn't go through all the details yet, you see there's industry norms given, and I'm assuming everybody knows what those industry norms are for at this point. When you do comparisons, you know, when you do a brief analysis, you're comparing this company to other companies in the same industry. You kind of get an idea of how well this company is actually doing, okay? If you flip to page 94, very briefly with me here. This is going to be what the worksheet looks like. The link is in Canvas. Again, I'm not going to get too far here today. I'm going to let you guys start to take a look at these. And then we have some basic, I think there was just one mistake on there. If you look at the liabilities and stockholders' equity section of the comparative balance sheet for global technology, the bonds payable have a due date of 2020, not 2010. Okay, so I did change that there. And if you flip to page 95, you see that there are your ratios. There are your 10 formulas that we're going to talk about. And in parentheses, I wrote, there were 2 ratios there I thought you might recognize being called something slightly different. So I just put those in parentheses. But I'm going to give you guys a few minutes to talk about those formulas. And right below, maybe jot them down if you can come up with those. I'm not going to put any up here on the board today. With whatever time we have left, which is only about 10 minutes. I'm going to let you guys have a conversation, see how many formulas you can figure out on your own, write them down, and even if you don't really want to use the cell references for your formulas, at least look at your financial statements and identify the account names that you would use to create those formulas that are being asked of you, right? So you guys are like, this is going to be easy because I know all these, right? Okay, that's what I want you to do for the next 10 minutes or so. That's all we're going to do for today. I will actually do those ratios then on Monday, we'll start looking at them together.
I'm good with